In the electric vehicle business, things have been especially rough. The stock market has been going up and down, which is normal. As the world's events change, so do experts' predictions. Funds also change their minds about which companies will be successful after the storm is over and the future plays out. It bets on what will happen when one of the biggest funds moves a big part of fund because the success of the fund depends a lot on the companies. Another reason is that it shows how the fund feels about these companies and how much they believe in them. A big fund just bought Tesla stock and sold GM stock. In what ways does this matter? Why did this happen? All of this will be shown in today's film. In the market for electric cars, companies like Tesla and General Motors are competing to be the best. Each side knows that the other won't give up an inch in the fight for customers' money. Investors are watching the fight and choosing which car titan to bet on. Goals for development and placement in the market. Tesla is ahead of the game because its market value is now over $837 billion. That's 12 times GM's market value of $68.9 billion. The Canada Pension Plan Investment Board, a Canadian pension fund set up in 1997 by the Canada Pension Plan Investment Board Act, has given Tesla a new trust mark. The Canada Pension Plan Investment Board, which is also sometimes called CPP Investments, is a crown organization that is in charge of spending the money that people put into the Canada Pension Plan. Based on a filing with the Securities and Exchange Commission, Canada's biggest public pension fund doubled its stake in Tesla in the fourth quarter of 2021 and decreased its stake in General Motors. The Canada Pension Plan Investment Board had 483,016 Tesla shares on December 31. This is more than the 368,706 shares they had on October 31. It was recently thought that that share was worth $418.3 million altogether. However, the Securities and Exchange Commission said in the same statement that the Canada Pension Plan Investment Board sold 4.23 million shares at the same time and still had 548,346 shares as of December 31st. This investment is worth about $25.6 million altogether. A lot of other large blocks of shares were also sold by the pension plan. Besides these car deals, the Canada Pension Plan Investment Board also sold 1.4 million shares of NVIDIA and 173,237 shares of General Electric. It looks like they're making the fund stronger and reevaluating the companies that are in it. The choice to sell off shares in General Motors is very interesting, especially since the company is in the middle of a big effort to make cars electric. This time, though, it looks like the Canada Pension Plan Investment Board had enough of waiting for a return and wanted to switch to Tesla instead. This makes sense given their brand values and recent events. As petrol prices have risen to an average of $3.61 across the country, stocks in Tesla and other electric car makers have gone through the roof. It was up 7.9% on February 28, 2022, and it hit a high of $885.67 for the day, as some buyers cashed out their gains. At the end of the day, Tesla shares went down a little, dropping about 7%. NAO went up by 10%, while Rivian went up by about 7.2%. Although General Motors wants to be the leader in electric vehicles, it's clear that this will take longer than they thought. Tesla, on the other hand, has been a star in electric cars almost since it became a public company in 2012. Elon Musk, who runs the company with a lot of energy, is one of the most famous business people of all time, along with Henry Ford and John DeLorean. For us, this means that the Canada Pension Plan Investment Board is putting their money on Tesla. But as one researcher pointed out, many experts are still not optimistic about Tesla. Even though prices could and probably will go up a lot in the future, it's not likely that they will go up in the same way they did in the past. So, people should lower their hopes, which would mean that Tesla had reached its peak and that its past success would be its all-time high. But some experts would disagree. Tesla had been in neutral since July 2020, but Nathan raised it to outperform that same day. Nathan thinks that the company has a bigger edge over traditional competitors that make internal combustion engines because of new worries about the supply chain and higher oil prices. It's important to remember this because even though General Motors is working to switch to mostly electric cars, they still make most of their money from cars with internal combustion engines. Nathan wrote to clients that Tesla's ability to ship from China, where costs are lower, and its history of better handling chip shortages in 2021 could make it more competitive in the current Russia-Ukraine crisis. At the same time, rising oil prices and the possibility of fuel shortages, especially in Europe, could hurt Tesla's position. Could speed up the switch to electric cars. As a result of Russia's invasion of Ukraine, investors seem to be betting that the US and European governments will move quickly to speed up incentives and uptake of electric vehicles, EVs. This is to reduce reliance on oil from other countries. The White House released a statement before President Joe Biden's State of the Union address on February 28th. The statement talked about his investments and programs for clean energy. We also think that the Canada Pension Plan Investment Board made this move because it was in line with their promise to reach net zero by 2050. The fund recently said that it will work to reach zero pollution by 2050, which is what the Paris Climate Agreement says should happen around the world. The fund manages $550 billion in assets for Canadians. Even though it's not the first Canadian pension to aim for net zero, this is the country's largest and only pension whose investments are felt by everyone. Ontario Teachers' Pension Plan has already promised that it will have no net debt. The Ontario Municipal Employees Retirement System and the Investment Management Corp of Ontario are all part of the Deposit and Investment Funds of Quebec. The U.S. wasn't left out of this promise, though. The Biden government also set goals to sell 50% of all vehicles as electric by 2030 and make it official that the U.S. will have net zero greenhouse gas emissions by 2050. To stay relevant, the plan is to cut greenhouse gas pollution by more than 50% by 2030. This will happen in the first 2 months of 2022. Businesses try to adapt to new times all the time. As you might expect, General Motors also said that it plans to replace gasoline-powered cars and trucks with electric cars and trucks that don't produce any pollution by 2035. The CEO of General Motors, Mary Barra, said recently that we believe in climate change. It's real. We now know that travel has a big effect because of this, according to Barra. She also said that people would likely want electric cars, like a Hummer that can go 350 miles on a single charge. It's getting bigger, and I think we're getting close to a turning point where people will be much more likely to buy an all-electric car because they can see the benefits. This is good for the Earth, but the car company still has a long way to go when it comes to electric cars. It seems like the Canadian fund doesn't like General Motors because it chose the other carmaker. Even more so since it comes at a time when the Detroit carmaker, led by CEO Mary Barra, is stepping up its efforts to catch up to Tesla. In other news, continuing crude oil futures dropped by 0.9% to $91.900.04 on Friday, just 1 day after trading above $100 a barrel for the first time since July 2014. As of late, intraday trade has been affected by doubt about the supply of new cars and the price of fuel. Nathan Aviawa said that the drop in profits from cars with internal combustion engines may make Tesla's rivals less likely to invest in expanding their electric vehicle lines. With more capacity being built in China and the US, he thinks Tesla is in a great situation to meet the growing demand for electric cars because of current events. The Canada Pension Plan Investment Board wasn't the only fund that bought Tesla shares. According to the SEC, reports that each fund files every 3 months. Vanguard and BlackRock Incorporated have also put more money into Tesla. Vanguard increased the number of Tesla shares they own from 61.9 million on October 30 to 62.4 million on December 31. 1/4 of Tesla's capital, or 52.8 million shares, were owned by BlackRock as of December 31. Kathy Wood of ARK Invest, who has been a Tesla fan for a long time, recently bought Tesla stock. She also said she doesn't believe in the current rise of traditional companies like Ford and General Motors. General Motors' stock price went up when the company made an electric version of the Silverado, which is its best-selling pickup truck. Wood told me to think about it. They went crazy when electric vehicle announcements came out, even though sales of electric vehicles only make up 2% of standard automaker sales. The rest of the sales come from gas-powered vehicles. Wood thinks that Tesla and other electric automakers are better investments than traditional automakers. He also thinks that a company like Ford or General Motors could report a surprise loss this year because they are investing more in electric cars and selling fewer gas-powered cars. That being said, it makes sense for the Canada Pension Plan Investment Board to leave an investment that might not pay off and put their money into something they think will. It said in the fund, "Our investment-only mission means that we can only think about how to get the best returns while avoiding unnecessary risk so that we can help 20 million Canadians save for retirement." What made the Canada Pension Plan Investment Board sell General Motors stocks and buy more Tesla shares? Leave a comment below.